Welcome to PersonalFN's video learning session. Many of you might have received a hike in salary for this financial year. While getting an increment fills us with happiness and zest, an important thing that must be borne in mind is tax planning. If not planned well, taxes can reduce a noticeable portion of your income. Thus, PersonalFN has listed down how you can save tax wisely as a salaried individual. First, structure your salary. Take your employer in confidence. See if you can structure your salary well. Include more allowances so as to reduce your tax outgo. Let us look at some of the components of salary which can help you save tax. Number 1, optimize basic salary. While having a very high basic component might result in high tax liability, reducing your basic component significantly might also reduce the benefits that you receive from the other components such as HRA, leave travel concessions, superannuation benefits, and so on. Therefore, optimize your basic salary. Claim HRA. If you live in a rented house and your organization provides you HRA benefits, then this can be used to lower your tax liability. The maximum amount that can be claimed under HRA is least of actual HRA received, rent paid in excess of 10% of salary plus the earner's allowance, or 50% of basic salary and DA in case of Chennai, Delhi, Kolkata, Mumbai, and 40% of salary plus DA in case of other cities. Then claim leave travel concession. LTC can be claimed for any journey which you have made either alone or with your dependent family members in India. The maximum amount that can be claimed is the least of the amount actually incurred or the amount of LTA allowed. The exemption extended to you is for 2 journeys performed in a block of 4 calendar years. Then the next is transport allowance. Expenses incurred for conveyance between your home and workplace is also exempt from tax. The maximum amount that is exempt has been increased in the union budget from Rs 800 per month to Rs 1600 per month. Then the next is medical reimbursement. A maximum of Rs 15,000 can be claimed every financial year on account of medical expenses, so don't forget to claim the same. Education allowance. If you have children, claim for the education allowance. A maximum amount that is allowed to be exempt under the Income Tax Act is Rs 100 per month per child for a maximum of 2 children. And if your children stay in a hostel, then a hostel allowance of a maximum of Rs 300 per month per child, subject to a maximum of 2 children, can be claimed. Then the next is meal allowance. The maximum amount that is allowed to be exempt is Rs 2,500 per month if these vouchers are used at eating joints. Apart from optimally utilizing the allowances to reduce your tax outgo, as an assessee, you should also be effectively using the other provisions of the Income Tax Act 1961. Like the first one, Section 80C. Don't forget to reduce your tax liability by investing in tax saving instruments. A maximum of Rs 1,50,000 per annum can be allowed as a deduction under this section. Then the next is Section 80CCD. After the announcement in the Union Budget 2015, you can benefit from an additional deduction of Rs 50,000 per annum available by investing in National Pension Scheme or NPS apart from Rs 1,50,000 per annum available under Section 80C. Section 80D. Premiums paid by you on medical insurance policy for covering yourself, your spouse, and or dependent children can be claimed as a deduction under Section 80D. The maximum amount that can be claimed as a deduction is Rs 25,000 per annum or Rs 30,000 per annum in case you are a senior citizen. Section 80G. Our Income Tax Act considers the humane side of our life. And so, if on humanitarian grounds you donate to certain specific funds, charitable institutions, approved educational institutions, etc., the donation amount can qualify for a deduction under this section, subject to the stated limits as provided under this section. Then the last but not the least, Section 24B. Interest on loan taken for the purchase of house property is available for deduction under Section 24B. The maximum amount available for deduction is Rs 2 lakh for self-occupied property and no upper limit for let-out property. It must be borne in mind that these are not the only options available for reducing your tax liability, and you must study all the deductions and exemptions available if you wish to lower your tax outflow. Moreover, PersonalFN is of the view that it would be prudent to take the help of an experienced consultant for planning your taxes and meeting your financial goals through appropriate financial planning. Thank you for watching. To watch more videos from PersonalFN, subscribe to our YouTube channel now, and do not forget to share below your feedback on this video.